Welcome everyone. Thank you for joining us today for Artwork, Tax Tips for Artists with Andrea Harper. My name is Angeline Simon and I'll be your moderator today. First, we'd like to acknowledge that our session is being streamed from Lethbridge, which is situated on traditional Blackfoot Confederacy territory. We pay respect to the Blackfoot people, past, present, and future, while recognizing and respecting their cultural heritage, beliefs, and relationship to the land. The city of Lethbridge is also home to the Métis Nation of Alberta, Region 3. This is our 9th session of Artwork delivered on Zoom. We appreciate the continued support of the arts community in tuning into these PD sessions. All the sessions are on our YouTube channel, by the way, so that's AAC Leth, and we will be recording today's session and uploading it. I'll also send it to everyone who has registered. And if you haven't already done so, please introduce yourself in the chat box. If you're an artist, please let us know about your practice. There will be time following the presentation for questions. So if you have any, please enter them into the chat box as the presentation is going through, and then we will get to them at the end. There's also reaction buttons, so feel free to give thumbs up if you like something. Now I will pass it off to Tara Galanders, our Membership and Projects Manager.
Hi, everybody, and welcome to this session, Tax Tips for Artists, which is always a very popular PD session, and we appreciate you spending some time with us this evening. So I'm just going to tell you a bit about the Allied Arts Council. We're a 62-year-old multidisciplinary arts organization, and our mission is to advance and enhance the arts here in Lethbridge and in Southern Alberta as well. We do things like we run CASA, where we have a robust education and gallery program. We have a fine arts and crafts store on 7th Street called AAC Works. And we also put on events such as Art Days, the Art of Giving, and our ongoing PD sessions called Artwork. So we have a very thorough program, a lot of interest to different artists at many different levels and places in their career. We are a member-based organization, so I'm going to hit you up now and just mention that membership is $25 for an artist member, and we would love to see people support us and get in touch with us. And we love having building relationships with artists here in Lethbridge and area. So as for tonight, I'm going to introduce Andrea Harper to you, who is graciously here with us this evening, is going to answer a lot of exciting questions that I'm sure you have ready for her. And I'm just going to read her bio. So Andrea Harper is one of Avail CPA's preeminent tax experts and their newest partner. She has helped countless business owners in Southern Alberta with complicated tax issues and helps develop and implement strategies for people and organizations to save money. During the COVID-19 pandemic, Andrea has been vital in ensuring local businesses receive the benefits and aid necessary to continue their operations. So I'd love to hand it over to Andrea right now. You're on mute. Andrea's on mute.
Oh, sorry.
That's okay.
Perfect. All right. Thank you for spending your evening with me, and we'll, try and make the tax as interesting as possible. I know not everyone's favorite topic, so I'll just share my screen here so that you can all see my presentation. All right. So I'm going to walk through some of the basics of looking at your activities during the year and determining whether or not you're an employee or self-employed, and then going into a little bit of the detail regarding what is deductible and what you need to include in income. So first thing that we need to determine is whether or not you're an employee or self-employed. For some people, this will be very easy to determine. It will essentially be, do I receive a T4? If you're receiving a T4 for employment income, you fall into the employee category. However, there might be some people who not only have employment income, but also have self-employed income, or business income is another way to look at that description there. So essentially what that means is that you're engaged by somebody to create a defined product or something, but then beyond that, you're given the freedom to approach it however you want, work the hours that you want, employ other people to help you, and you're not really restricted. Whereas an employee, you're really controlled in terms of the amount of work, the nature of the work, and the management of that work. So those are the sort of the two main differences between those types of people. When we look at sources of income, so we have income from business. Income from business would be that self-employed income. We have income from property. So for example, maybe you're receiving royalties for a book that was written or something like that. That is generally considered income from property. You might have income from office or employment. So again, this would be your T4 employment income. And you may also have other income. So maybe you've received some grants. Sometimes those don't fit into any of the other categories, and so they become part of other income. So when we're looking at, do you actually have a business? Because that's the other question is, well, when do I start reporting all of my activity? I'm not an employee, I don't get a T4 slip, but I do make some money from my artwork. So when is that time frame? And it's a little bit tricky to determine. There's a whole bunch of factors that we can look at. So how much time do you spend? Do you have a full-time job outside of your artistic endeavors? Or do you spend a good amount of time working on your art? Have you presented your work? Are you represented by anyone or doing consistent marketing or promotion of your art? Have you received revenue from sales? What has a history looked like? So have you historically shown some profits related to the business, or have you had losses historically? What types of expenses are you incurring? And then have you taken any training, or do you have any qualifications related to your field of art? So those are all things that could factor into whether or not you have a business. There's not one that weighs more than another. So it's really just a combination of all of your activities, and if there's the magnitude there to say that, yes, you actually have a business. So if we've sort of gone through all of that and said, yeah, we think that we've got a business, there's enough activity there, substantial amount of your time you're spending, then we need to look at, well, what sort of income do we need to pick up from this business? So obviously the sales of your artwork would count as income from business. If you received any sort of financial assistance, so for example, a grant from Canada Council for the Arts, that would also be considered income from your business. And also royalties. I had said that royalties might be in their own category, but here, if you actually have a business and those royalties relate to your business activities, they would actually get included into your business income. So really, for the most part, anything that you're receiving is going to be included in your business income. Now you can deduct expenses against that income. There are sort of overarching requirements in order to deduct expenses. So the first one is that they have to have been incurred to earn taxable business income. So if they didn't spend it to earn business income, then you're not allowed to deduct it. The next one is that it's not capital. So what that means is that it's not your car or a piece of equipment that you use to make your artwork or your jewelry or whatever it is that you're crafting. It can't be a personal or living expense. So if it's an expense that you would incur anyway, then it's not deductible. So quite often this would be food, housing, clothing, things like that is all considered personal or living expenses. The last one is that it has to be reasonable. This is a tough one because obviously everyone's opinion of what's reasonable is slightly different. And CRA is going to have one opinion of what's reasonable, and we might have another opinion of what's reasonable. But essentially, if you had to incur it to earn business income, generally there's a pretty good argument that it's going to be reasonable. So specifically, you may find that you have insurance premiums that you're paying on your equipment or instruments if you're a musician. Repairs or maintenance of that instruments or equipment could be a deductible expense. If you pay a lawyer or accountant to help you with your business, those would be deductible. If you're part of any union or membership dues, those would be deductible. Commissions that you're paying to somebody who's helping you sell your work. If you're paying an assistant, that would be deductible. Publicity, cell phone, your shipping expenses, professional development or specialized training, all of those items are things that you could deduct from that income that you had to include. And there would be others as well. This isn't an all-inclusive list. This is just maybe some more common ones that you might see coming up for your activities. So one of the ones that we quite often get asked about is home office or workspace. So when we're looking at a workspace or home office, there are two criteria that must be met in order for us to be able to deduct. So it either has to be your principal place of business, or it has to be used exclusively to earn business income and used on a regular and continuous basis for meeting with clients. So this can be tough to meet if you've got an office location or a workshop location that you're renting from a third party. That might make your home ineligible. So you already have a space that you're using principally for your art. Therefore, you can't deduct any home office or home workspace area. So when we're looking at these expenses, we can't actually create a loss using this home workspace or home office. But if we're not able to use all of our expenses, we can carry those forward to the next year. So they're not completely lost. They just roll over into the following taxation year. When we look at if you're an employee, the income from employment would be salaries, wages, other remuneration, benefits and allowances. Those would be the common items that you'd see being included in income for those individuals. So again, we've got employment expenses that we can claim. Now, the difference between an employee deducting expenses versus a business deducting expenses is that the employee is generally more restricted. They don't have as many types of expenses that they can deduct. And they also need their employer to fill out a form saying that, hey, I've required you to incur these expenses in order to earn your employment income. So potentially these might include travel or your motor vehicle expenses. So maybe not so much in 2020, but in other years, you may have had to travel for shows or to meet with potential customers. So that sort of travel would be considered deductible, assuming that your employer didn't reimburse you for your costs. If your employer covered the costs or reimbursed you for them, then we can't claim those expenses. And you'll see here that there's a variety of other expenses that we can deduct. Some of them are actually specific to artists. So the cost of your musical instrument maintenance or insurance, the cost of creating your works of art or composing, performing, any of those costs, again, that are out of pocket. So if your employer is covering them, you're not going to be able to deduct those expenses. Looking at grants, so perhaps you've received a grant to help with the production of your artwork. In this case, you'll be actually getting a tax slip that reports this income, so a T4A slip. You are required to report that grant income on your tax return. There is a basic exemption of $500. So if the grant is under $500, it's going to fall under that exemption and you won't be paying any tax on it. However, that's not too large of an exemption and maybe the grant is larger. So for specific types of grants where they're related to a particular production or issued to produce something in particular, you can actually deduct reasonable expenses incurred to produce that piece of artwork. So when we're looking at this, we can't include any expenses here against the grant that we've already deducted elsewhere. So you'd be looking at, well, what did I have to spend to produce the artwork? And you can deduct that from the grant. You cannot exceed the amount of the grant, so you can only bring it to zero. You can't take it into a negative position. So again, when we're looking at, well, what are reasonable expenses? You cannot include those personal if you've been reimbursed, if you've deducted the expenses elsewhere, like I talked about, maybe on your business schedule, and you cannot claim expenses for others. So for example, if maybe when you went to a show, you brought your spouse with you or your children with you, the expenses related to them are not going to be eligible expenses. Another question that might come up when you're looking at your activities is, what about GST? Do I need to be registered for GST, and if so, when? There is a small supplier threshold. So if your revenues are under 30,000, you don't have to register. So this is looking at the last 12 months. If you were under 30,000 of gross revenues, you don't need to worry about it. Once you exceed 30,000, either in a single quarter or in the last 4 quarters, so the last 12 months, you do have to register. And that means that you would be charging GST on anything that you sell. However, you can reduce what you send to CRA by any GST that you've paid on business expenses. So you collect the GST from your customers, reduce it by any GST that you've paid, and then you send the difference in to the government. That can either be done on an annual basis, quarterly, or monthly. If you've got fairly low revenues, generally it's easier just to do the annual. But once you start getting up there in terms of your gross revenues, you are then required to flip to more frequent filings. But for most people, they're able to stay within that annual filing. So donations are another item that may come up. And there's the typical cash donation that you make to your favorite charities and you get your donation receipt. The other type of donation are gifts in kind. So maybe you've donated a painting or some jewelry or something that you've created to a registered charity. So generally what happens there is that you have to include in income the fair market value of that item. So what would you have sold that item to somebody for? That gets included in your income. However, the charity would then be issuing you a donation receipt with the same fair market value on it. So you'd have an income inclusion, but then you'd also have a donation tax credit that you're able to claim. That's typically how it works. There might be certain exceptions there, but that's the general rule of thumb if you're donating your artwork to a registered charity. Shifting gears a little bit, we're going to jump into SERB and talk really quickly about what's going on with this program. So this program came out quite quickly and was aimed at residents of Canada who were at least 15 years old. They had to stop working due to COVID, and it had to be involuntary, so they couldn't have quit their job. They had to have been laid off due to the COVID restrictions and requirements. So they also needed to have employment or self-employment income of at least $5,000 in 2019 or the 12 months prior to application. This criteria was one that created a lot of confusion, and people weren't sure whether or not they were referring to gross or net income. And the CRA has decided not to enforce the rule that it was actually supposed to be gross income rather than, or sorry, there was supposed to be net income rather than gross. And a lot of people went based on gross. So they are going to let those ones slide if they apply based on a gross position rather than a net. And then the final piece that we have to look at is during the period that you applied for CERB, you weren't supposed to have earned more than $1,000 in that benefit period. So if any of these aren't met, technically CRA is going to require repayment of the CERB benefit. There is a lot of question marks out there about how CRA is going to apply that and when they were going to require the repayments. So I think with that side of things, we just need to keep our ears open for further information. But it sounds like CRA is trying to work with people who do have to repay it to try and not make it super strenuous for them to need to repay it immediately. And in that respect, they have introduced this interest relief program. So where it's aimed at is people who have $75,000 or less of taxable income during 2020. They've received at least one of the benefits. So for example, CERB. They get an extension on the payment until April 30th of 2022. So if you owe tax related to 2020 and you meet those two criteria above, you don't have to pay your taxes until April 30th of 2022, and any interest that normally would have been paid or charged to you would be waived. The only key piece to note here is that this does not apply to the late filing penalty. So you need to still make sure you're filing your 2020 tax return on time to avoid that late filing penalty. But that's a nice little piece of relief that's come out for people who owe some taxes this tax season. Some nice resources that you may want to check out, and I do have links, but unfortunately they're super long URL links, so I couldn't fit them all on the slides. But if you were to Google these descriptions, it would come up with the website, and I'll also provide the links so that those can be posted. But the income tax folio goes through pretty much everything that I've talked about today in a lot more detail. So that might be a great resource if you're looking at your own situation and wanting to get a bit more guidance in terms of what expenses you can claim or whether or not you're an employee or self-employed. That folio will have a lot of great information for you. Another really nice tool is the home office calculator. So again, this is a calculator that the CRA has come up with, and you can go through and answer the questions and fill in the amounts, and it'll actually tell you how much you can claim for home office expenses. And we'll also provide you with some guidance on what you can and cannot expense related to that. The last one that might be of interest for people to look at if you're preparing your own tax return is the all deductions, credits, and expenses. So this is a page that CRA has released where you can find any and all deductions, credits, and expenses that are available. And you can easily search it and then click on the relevant expense or deduction, and it will take you to another page that provides you with even more information on those deductions, credits, or expenses. So super nice resource if you're wanting to look into some specific deductions or tax credits that are out there. So in terms of my plan presentation, I didn't want to take up a ton of time with it. So that's what I had planned. And now we will turn it over to any questions that you guys might have.
So yeah, I'll just give a couple moments here to see if some people are going to type in some questions.
Okay.
Okay. Okay, we got two questions here. I'll start with Tanya's. Does the Alberta Small and Medium Enterprises Relaunch grant from December work the same as an arts grant?
Yes, sort of. So it is taxable. So in that sense, yes, it does work the same way as the arts grant. That up to $20,000 that you may have received needs to be included in your business income for the year.
Okay, thank you. I have another question here. Kasia said, I attended a residency this year that the gallery paid for, so I could produce work for a show. Do I have to claim that money I used to pay for the residency as income?
I'm going to say yes, and then you can deduct any expenses from that you incurred from putting that on.
Okay, thank you. I have another question here. I want to ask a question about how to claim a cash donation. Instead of donating my products for a charitable cause, I donated a percentage of all my sales. Is that relevant?
So cash donation, if you've made those to a registered charity, they should be issuing you a donation receipt. And assuming that you've done this personally and not as an incorporated business, you'll just report that donation receipt on your personal tax return and you'll get a donation credit related to that. So if you haven't already received your donation receipt, it should hopefully be coming in the mail sometime this month. Fingers crossed. If you don't see it coming through, you might want to follow up with the charity that you made that donation to.
Shannon said, will you be providing the links for resources?
Yeah, I think that I can give them to Angeline and she can make sure that they show up.
Yep, I can send them in an email to everyone who participated. We have a question from Brian. When does a profit versus loss situation result in the need or capability to collapse a company which has otherwise been somewhat profitable for years?
I'm not sure I fully understand the question, but so it sounds like we've got an incorporated business, so a corporation, and it's been making a profit for a while, and now we're looking at winding it down. There's not really an income threshold determination. It's purely at a point where you said, I don't want my company anymore, and I'd like to get rid of it. There are tax implications from shutting down a corporation. So any assets that your corporation owns, you have to dispose of either to third parties or maybe to yourself as a shareholder. That disposition can trigger tax. And then you have the company dissolved. I'm not sure if that's quite what you were talking about there, but there isn't necessarily an income threshold to when that needs to occur. It's essentially when you've decided to do that.
It looks like it was a personal business.
Oh, okay. So as a sole proprietorship, you don't need to have that formal certificate of dissolution. Essentially what you do is you look at your level of activity and determine, am I still having enough activity to be considered to be operating a business? It's one of those really gray areas in terms of what's the cutoff. At some point, CRA might come back and question if you've got quite a number of years of losses built up. But there's no bright line test for that. It's purely what's your activity level, and then you need to assess for yourself.
Wonderful. Okay, so I have a couple more questions here. It says, I'm wondering about declaring my art practice a business, but still have income as an employee. Can I claim myself as a business in order to deduct expenses and still file T4s as an employee?
Yeah, so you can have both employment income and a business. You just need to make sure that you're properly allocating expenses. So it could be that as an employee, you didn't have very much in the way of expenses because your employer covered most of them for you. So that might be fairly simple to say, okay, here are all my expenses related to the business. And any incomes that you're earning from the direct selling of your artwork would be reported on that business schedule with the expenses. So again, it would be a test of how much activity do you have there, that are you actually running a business?
Following that question, it was added on, can I claim as a business 1 year and then be an employee the next year? Or do I have to make a decision about being self-employed and not change that?
It's a little bit of a decision. It might depend on the contract. So for example, if you've entered into a contract with somebody and it is laid out as an employment contract, you can't switch that contract. However, you could enter into a new contract or agreement with somebody under different terms and be a self-employed individual under that contract. So it really depends on how many contracts you've entered into or agreements and what the terms are. So yes, you could be both an employee and self-employed, and you can flip back and forth, but it would have to be under new agreements. It couldn't be one agreement that switches. I hope that makes sense.
Okay, another question here. My husband and I are both musicians. We basically have 3 categories of income. Mine, teaching lessons, working with band students, etc. My husband, he also teaches lessons. And the work that we do together as a duo, mostly performing and school residencies. How do we represent these 3 types of income in our taxes?
So you again have to look at teaching lessons, working with band students. Are you getting employment income from those, or is that a business? So it could be that what you're doing is reporting one business schedule for your teaching lessons, your work with your band students, and then your husband is maybe reporting his own business schedule for teaching his lessons, and then you might have a joint business schedule for your performances that you do together. But to me, it sounds like you might actually have all that income being reported on business schedules from the way that was worded. So in that case, you might have to look at how you're going to allocate your expenses between the different businesses that you've got. The other alternative would be that you say, you know what, all 3 of those activities are one business. You and your husband report all of that income on a joint business schedule together, so that you're not having to try and allocate expenses out. It would be a little bit of what is the facts of your situation.
Thank you. Another question here. When does it make sense to become incorporated as a self-employed artist?
Okay, so this is a good question. Generally speaking, in terms of incorporation, we wouldn't really be looking at incorporating somebody until they had a lot of income, net income, coming from their business, and they didn't actually need that net income personally. So for example, if your net income, net profits from your business, you need to live on, and you're not putting any money into savings, or you don't have a bunch of excess cash building up, it probably doesn't make sense to have a corporation. Where a corporation could benefit you is if you have high net income and you don't need all that net income to live. So the nice thing about a corporation is it provides a bit of tax deferral. So you're saving some tax dollars along the way, but if you're just going to pull all the money out to live on personally, the corporation's not going to really help you.
Okay, thank you. Going back to the previous question, with the 3 different categories of income, they followed up to their question.
Okay.
They said that they currently file 3 schedules, which works well for expenses. How do we determine when we've reached the point of needing to start charging GST, when one of the 3 schedules has reached the limit, or do we need to add them together to see if we are still under the limit?
You would need to look at them on a consolidated basis. In terms of GST, you look at all your affiliated entities. So you and your husband, because you're married, you would need to look at what you're in aggregate making for that 30,000 threshold. And then you would need to register for your GST and then charge it on your services.
Thank you. Another question here. Do I need to claim the amount in market value of products that remained unsold by the end of 2020? What do my unsold and finished products count as for tax season?
Okay, so your inventory or unsold products, you don't have to include them in income because you haven't actually sold them yet. There are sort of two different ways that you can go with the costs associated with producing those products. So one is that we don't deduct them because we haven't sold them, so we're trying to match the revenues with the expenses. But there is also an election to say, well, I'm just going to deem my inventory to be zero, which means that you're deducting the expenses related to producing those products as you go. So no income inclusion until you've sold. And you can either elect to deduct the expenses as you incur them in terms of your inventory, or you don't deduct them until you've sold that product. So there's a few different options there.
Thank you. Another question here. I invested in a few instruments to establish a music business, but didn't earn much because we couldn't play. Do I claim those instruments in 2020 or in 2021? They were each about $500 or less.
Okay, so technically musical instruments are considered capital. So capital items, we can't expense all in the year that we bought them. What ends up happening is that we amortize them. So what that means is that we expense them over time in accordance with where CRA has set the prescribed rates. So technically you would need to capitalize those and expense them over time.
Okay, I don't see any new questions. I'll just give it a second here if anyone's typing. Okay, I don't see anything else. So I think we can probably wrap it up here. Tara, did you want to come back on to do the last few words?
Yep. Thank you so much, Andrea. That's really useful information. I know it's confusing sometimes, and we really appreciate your advice on some of these questions dealing with the arts. So thank you so much for doing this for us. And I would just say in conclusion, consider becoming a member of the Allied Arts Council, or if you have any questions about what we do as an organization, please get in touch with Angeline and myself. We would love to speak with you and answer any questions. Angeline works out of CAFA, and she is super knowledgeable about that. And so, we're here to assist in any way. So thank you so much. Thank you, Angeline, and thank you so much, Andrea, again.
Thanks, Andrea.
Thank you.
All right. Thank you so much, everyone. Have a great evening.
You too. See you.